The stock market put in another strong month. It ended the month of November with a gain of more than 103 points, almost 4% month over month. And for the year to date, the S&P 500 is up over 634 points, slightly more than 25%. Will the stock market continue to go up in December? Looking at the S&P 500 monthly stock chart here, we see it printed a solid bullish candle for the month of November, and it's moving toward this upper bound of this megaphone, this multi-year megaphone price channel. And it has surpassed the extension 261.8. And if you held on and did not get out at the 2007 financial crisis top, your holding would have appreciated 161.8%. And if you have bought at the 2009 low, you have made over 261.8%. Now, I'm not here to tell you how deceitful this market is due to record level of corporate stock buyback, or how the Fed manipulated this market by injecting massive amount of liquidity into the market by printing money, because we all know eventually we will have to pay the piper. This type of market manipulation will not last, and more importantly, will not stand. That's the reason we should always be on the lookout for the unexpected. Always expect the unexpected. The stock market will never do the obvious. So let's go and take a look at the chart. On the S&P 500 weekly chart, the S&P 500 continues to one-time framing up for the 8th week. On the daily S&P 500 chart, the S&P 500 continued to grind higher. It did have a small pullback a couple of weeks ago, but it did not break this daily uptrend. We could see another pullback in the coming days, but I will show you what the market is doing that is telling us more new high is coming at the end of this video. So keep watching. Before I continue, I'd like to ask you to click the thumbs up to give it a like. This will help support my YouTube channel, and it will help this video on breaking the YouTube algorithm. And subscribe to help me reach my goal on achieving 1,000 subscribers for my channel. Thank you for your support. We could see a near-term pullback, possibly back down to this 3125 area near this 50% level, or it could break this uptrend. And in order to do that, it essentially have to break below this pivot low. Then we might see it work itself back down and test this 3027.98 or near the 3028, this pivot high here, and possibly get into this trend line. If it pulls back and it bounces, then most likely we probably see this market might try to move up to this 100% extension. That's essentially this balance area, right? The depth of this balance area, and that would be 100% extension up to over 3200 level. The 60-minute chart, we can see that the price on the S&P 500 seems to be indicating that it might want to roll down and possibly get down and test this trend line. But with Black Friday and Cyber Monday, I wouldn't be surprised that on Monday we probably see a gap up, and maybe it will try to work itself up to this 78.6, this 3179 area, 3180, before it roll down and try to come down and tag this trend line. Key point that I want to keep an eye on is this 50% extension near the 3125. And if we break that 3125 and get underneath this trend line, then the next level that I'll be watching is this pivot low somewhere below the 3100. Then maybe that will bring in a little bit more of a correction down to this pivot high here near the 3028. A couple of weeks ago, we were looking at the AD line against the S&P 500, and we saw a negative divergence on the AD line versus the S&P 500. And you could see right now that as the S&P 500 continue to make new high, the AD line did come up and make a higher high, so the divergence is no longer exists. So we're going to keep an eye on this internal and see when it will develop the next negative divergence. Looking at the new high, new low on the S&P 500, you can see that the S&P 500 make new high, and the new high, new low still not making higher high here, but it did expand it upwards. So it is showing a little bit of an improvement on the new high, new low. And there were a couple of times during the last 2 weeks, the new low actually outnumbered the new high. So we'll keep an eye on to see how this new high, new low improves as the S&P 500 makes a new all-time high. Let's take a look at this chart here to see what the market sentiments are. Here I have the put-call ratio and the VIX and the S&P 500. As you can see, S&P 500 been climbing to a new high. And you can notice that the put-call ratio is down at 0.69. And that translates to almost 145 call for every 100 put. So that means a lot of people is getting very bullish on this market. Expect the unexpected. Look at the VIX. The VIX is pretty low, down at the 11, below my line from previous low of 11.69. And it is, creeping up a little bit. So be cautious and be watchful of the VIX. And if you see this start to expand upward, and also this continue to be down at this bullish area, on the put-call ratio, watch for the turn and start creeping up. And as the put-call ratio start moving back up, that is when we're going to expect the unexpected, because there are a lot of current events that could throw a twist on this upward movement in this stock market. We have the potential increase in tariffs as the December 15 deadline getting near, right? That trade deal with China. And we also have the potential China retaliation to the bill, the Hong Kong bill that the Congress passed and Trump has signed last week. And then we also have the election over at UK, right, and the Brexit. So that could throw a little twist on that. So there are a lot of things that could turn this market on a dime and have it take a unexpected dive. Right, so be careful and expect that unexpected. And here's how the market is telling us that there could be more new high coming. Right, you notice on the chart here, I have the New York Stock Exchange Composite Index here, and the Dow Jones Transportation, the Dow Jones Industrial, the S&P 500, the NASDAQ 100, the NASDAQ Composite, and the Russell 2000. And on these chart on here, I have this blue arrow that basically pointing to the time that the index made a all-time high. And you can see that the New York Stock Exchange Composite is way back here, although last week it almost made a new all-time high. So I wouldn't be surprised in the coming week the New York Stock Exchange Composite will make a new high. But look at the transportation. The Dow Jones Transportation is still way below the all-time high. Now, last week, the Dow Jones Industrial, the S&P 500, the NASDAQ 100, and the NASDAQ Composite, they all made new high or new all-time high. And although the Russell 2000 came up, but it's still pretty distant away from the all-time high here. So we need to watch these indexes to see will they come up and make new high. I say the market is telling us that there is new high coming. Now, when you have multiple indexes making new high, that means there are a lot of different market segment is pushing up this market. So that is not a sign of weakness. That is a sign of still there is strength there to push the market higher. So as the number of indexes making new high getting less and less, that is the first sign that it tells us that the market is near the top. So right now with the 4 major market indexes making new all-time high, is not an indication that the market has made a top. So that's the reason why the market is telling us look for newer high in the coming days or coming weeks. On any pullback, there could be a possibility of buy the dip type of scenario in play for that next new high. So good luck And don't forget to smash that like button to help me break that YouTube algorithm and help me reach my goal of attaining 1,000 subscribers for my YouTube channel by clicking that subscribe button if you're not already a subscriber of my YouTube channel. Thank you for watching. Have a happy and a safe holiday.